This is Alan Bush with the Daily Financial Forecast for Thursday, December 6th. Starting out with the stock index futures, pressure developing this on news that an executive at a Chinese high-tech company was arrested in Canada for extradition to the U.S. So this very much put a damper on the U.S.-China trade situation and all of its negative implications. Recent weakness in the global economy is likely to cause central banks around the world to become more accommodative, at least those that are accommodative already. Those that are a bit on the hawkish side are likely to scale back that hawkish rhetoric. So ultimately, it will be lower interest rates globally that will rescue this market, but it may take a while. I do think there are better opportunities elsewhere, which I'll get into in a bit. Moving over to the currencies, it appears that the dollar index has been capped to some degree, especially with interest rate differentials now turning a bit less favorable to the dollar index. Even today, the dollar index was higher in the overnight trade in a flight to quality move, but as traders apparently looking more at the interest rate situation, pressure developing now in the U.S. dollar, coming in lower more recently. Moving over to the interest rate futures markets, I think this is where our focus of attention should be. Current conditions suggest that the credit market futures are likely to continue to advance. The Fed likely to be very withdrawn, I would say, to some degree as far as their hawkishness and as far as interest rate increases next year. It now appears only one hike from the Fed in 2019. Just a couple of weeks ago, the talk was for 3 or 4. Other central banks likely to be less aggressive as well. So the credit markets, I think, is where we should be looking at, trading from the long side, of course. And this is a situation that will last, I think, quite a long time. Another beneficiary of current conditions is the gold market. Chart's looking a lot better. A weaker dollar, if that persists, also a beneficiary to the gold market. So gold looks like a market that should be bought on weakness. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.